Welcome to PIVA's Get Set for Retirement Insurance presentation for members approaching retirement. This presentation is an overview of the insurance benefits offered in retirement and is not meant to be a comprehensive description of each benefit. Refer to the online Insurance Benefits Guide for more information. In this presentation, we'll review retiree insurance eligibility and funding, retiree enrollment and eligible dependents, retiree health plans, prescription coverage, dental and vision coverage, life insurance and long-term disability, MoneyPlus, returning to work, and resources. Let's begin with retiree group insurance eligibility and funding. It's important to understand that eligibility for retiree insurance is not the same as eligibility for retirement. Determining retiree insurance eligibility is complicated, and only PIVA can make that determination. It is very important to contact PIVA before making final arrangements for retirement. Coverage does not automatically continue at retirement. After receiving confirmation of eligibility, you must submit the necessary forms to enroll in retiree coverage. To begin the process of determining your retiree insurance eligibility, submit an employment verification record to PIVA. You may submit the form up to 6 months prior to your planned retirement date, but no more than 31 days after your retirement date. You can find it under Forms on PIVA's website at www.piva.sc.gov/forms. No matter how or when you qualify for retirement, to be eligible for retiree insurance coverage, your last 5 years of employment must have been served consecutively in a full-time permanent position with an employer that participates in the state insurance program. Any break in service may impact your eligibility. Earned service credit is time earned and established in one of the defined benefit retirement plans PIVA administers. Earned service credit does not include any purchased service credit not considered earned service in the retirement plans, such as non-qualified service. For those members who participate in the State Optional Retirement Program, State ORP, or who work for an employer that does not participate in a PIVA-administered retirement plan, insurance eligibility is determined as if the participant were a member of the South Carolina retirement system. This means 1 year of employment is equated to 1 year of earned service credit. As an active employee, your employer pays part of the cost of your health and dental insurance. When you retire, several factors determine if you pay all or part of your insurance premiums. These factors include your years of earned service credit, the type of employer from which you retire, and the date you were hired into an insurance-eligible position. Retirees of state agencies, public higher education institutions, public school districts, and other employers that participate in the South Carolina Retirement Health Insurance Trust Fund may be eligible to receive state funding of their premiums if they meet certain requirements. Optional employers are eligible to participate in PIVA insurance benefits, but are not required to do so by law. Therefore, they make their own determination whether they will fund all, a portion, or none of their retirees' premiums. Please note that changing employers could affect your eligibility for funding when you retire. See the Retiree Insurance Eligibility and Funding flyers on PIVA's website for more information. When determining retiree insurance eligibility and funding, PIVA looks first to see when an employee was hired into an insurance-eligible position with a participating employer. This establishes which set of eligibility and funding rules apply. This chart shows the rules for those hired into an insurance-eligible position with a state agency, public higher education institution, or public school district before May 2, 2008. This chart shows the rules for those hired into an insurance-eligible position with a state agency, public higher education institution, or public school district on or after May 2, 2008. This last chart is specific to employees who retire with an optional employer. Optional employers are not required to pay any portion of a retiree's insurance premium. Eligible retirees may be required to pay the full premium cost. If you work for a charter school that does not participate in a PIBA-administered retirement plan and you meet the eligibility requirements for retiree group insurance, employer funding, if any, is at the discretion of your charter school. If you are a Class II member of the South Carolina retirement system who retires at the age of 55 with at least 25 years of service, and PIBA determines you to be eligible for retiree group insurance, you must pay the full premium costs, both employee and employer share, until you reach age 60 or until the date you would have had 28 years of service, whichever comes first. After reaching age 60 or 28 years of service, you are responsible only for the employee share. Now let's talk about enrolling in coverage as a retiree and eligibility for dependents. If you do not submit an employment verification record prior to your retirement, you must do so within 31 days of your retirement date or a special eligibility situation, such as marriage. If you have applied for retirement, submit the form as soon as possible to PIBA. If PIBA determines you are eligible for retiree group insurance coverage, you must submit a retiree notice of election form and a certification regarding tobacco or e-cigarette use form within 31 days of your retirement date to enroll in coverage. Enrollment is not automatic. As a retiree, you may cover your legal spouse as long as your spouse is not eligible for coverage as an employee or a funded retiree. If your spouse is eligible for coverage as a non-funded or partially funded retiree, or if your spouse retired from an optional employer, then your spouse may be added to your coverage. Eligible dependent children include a natural child, stepchild, adopted child, child placed for adoption, foster child, or a child for whom you have legal custody. An eligible dependent child may be covered under medical coverage until age 26. If the child is determined to be incapacitated as defined by the state health plan, coverage may continue beyond age 26. For more information regarding incapacitation determination, refer to the Insurance Benefits Guide. If both parents are eligible for PIBA insurance coverage, only one parent can cover the dependent child under any one plan. An eligible dependent child who is employed with a participating employer may enroll as an active employee with his employer or be added to his parents' coverage as a dependent child. A child added as a dependent may be excluded from certain services such as maternity benefits, as well as excluded from enrolling in optional life, long-term disability insurance, and MoneyPlus. Supporting documentation is required to add dependents to coverage. For an eligible spouse, a marriage license or the first page of your most recent federal tax return, if filing jointly, is required. For a dependent child, a copy of the long-form birth certificate showing parental information or copies of court documents are required. The state health plan also offers continuation of coverage for survivors. Dependents covered at the time of the covered retiree's death may continue health, dental, and vision coverage. A surviving spouse remains eligible until remarrying, and a surviving child remains eligible until age 26. Note, if all coverage is canceled, the spouse or child cannot re-enroll as a survivor. The annual open enrollment period, which allows you to change your coverage, occurs each year during the month of October. These changes may be made online through My Benefits at mybenefits.sc.gov. Elections are effective January 1st of the following year. If eligible, you have options for your health plan coverage through PIBA in retirement. The state health plan is a self-funded plan. This means the premiums you pay as a subscriber and those your employer pays on your behalf do not go to an insurance company, but are instead placed in a trust fund. PIBA pays member claims and the plan's administrative expenses from this fund. Although PIBA is the insurance provider, Blue Cross Blue Shield of South Carolina is the third-party claims administrator for the state health plan. Blue Cross processes medical claims and provides other support. Express Scripts is the pharmacy benefits manager and processes prescription claims. The state health plan is a great value to South Carolina's public workforce. If you want to see how it stacks up to other plans, you can check out the benchmarks found on our website. Proactive health management is a key to maintaining low costs. We'll talk about the many health and wellness benefits available to you later. The state health plan provides worldwide coverage. As an enrollee, you pay any applicable co-payments, deductibles, and co-insurance. Using an in-network provider will save you time and money. In-network providers will file claims on your behalf and have accepted the plan's allowed amount for services, even if a provider charges more. Out-of-network providers may be used. However, you may have to file the claims and may be balance billed. Not only does that mean a higher out-of-pocket expense for services, but a higher co-insurance as well. You may find a network provider near you by using the Find Care link at statescsouthcarolinablues.com. Non-Medicare eligible retirees have two options for health coverage under the state health plan, the standard plan or the savings plan. Both plans include prescription benefits. Review the online comparison flyer for more information about the plans. Retirees with TRICARE coverage may also elect to enroll in the TRICARE supplement plan. Let's begin with the standard plan. The standard plan has lower deductibles and higher monthly premiums. You'll pay co-payments for certain services, such as office visits and outpatient services. There are also co-payments for prescription drugs from a network pharmacy. The standard plan also provides coverage for adult well visits based upon the United States Preventive Services Task Force A and B recommendations at specified age intervals. The savings plan is a high deductible plan with lower premiums. There are no co-payments for services. Instead, you pay the full allowed amount for covered benefits until you meet your annual deductible. Savings plan members pay the full allowed amount for prescriptions until their annual deductible is met, too. Adult well visits include evidence-supported services based upon the United States Preventive Services Task Force A and B recommendations and are available each year at no cost under the savings plan. In addition, you can contribute to a health savings account on a post-tax basis. Once you or one of your covered dependents becomes eligible for Medicare, Medicare will be your primary payer, which means it will pay your claims first. Your PIBA coverage will be your secondary coverage. When you become eligible for Medicare, you should enroll in both Medicare Part A hospital coverage and Part B medical coverage. The Medicare enrollment period begins 3 months before your 65th birthday. If you are receiving Social Security benefits, the Social Security Administration will contact you and automatically enroll you in Medicare Part A. If you are not receiving Social Security benefits, you will need to contact the Social Security Administration. Medicare benefits include a Part A deductible per benefit period and a Part B annual deductible. Premiums and deductibles are set annually by Medicare. There is no Medicare coverage outside of the United States and its territories. If you become Medicare eligible before age 65, you must notify PIBA and provide a copy of your Medicare card. You'll be eligible to change health plans within 31 days of Medicare Part A eligibility. Medicare eligible retirees also have two options for health coverage under the state health plan: the Medicare Supplemental Plan or the Carve-Out Plan. You can learn more about both plans in the Insurance Coverage for the Medicare Eligible Member Handbook. The Medicare Supplemental Plan coordinates with Medicare and pays the Medicare deductible for Parts A and B and coinsurance up to 100% of the approved charges. Keep in mind that just like Medicare, the Medicare Supplemental Plan does not offer coverage outside of the United States. Because the supplemental plan includes a prescription drug benefit, there is no need to enroll in Medicare Part D. For a non-Medicare dependent spouse or dependent child, claims are paid under the standard plan. The Medicare supplemental plan does not coordinate with any Medicare Part C, a Medicare Advantage plan. Therefore, enrollment in a Medicare Advantage plan is not needed. When you reach age 65, you will automatically be enrolled in the Medicare Supplemental Plan if you already participate in the state health plan. PIBA will notify you 3 months prior to your 65th birthday. If you choose, you may opt out of the Medicare Supplemental Plan within 31 days of turning age 65 and remain enrolled in the standard plan. It's important to note that Medicare will be primary regardless of what plan you choose, as long as you are not actively working in an insurance-eligible position. Let's take a look at how the Medicare Supplemental Plan coordinates with Medicare. As a Medicare-eligible retiree, you receive a hospital bill of $7,500, which is the Medicare-approved amount. The Medicare Part A deductible you are responsible for is $1,484. Medicare will pay $6,016, which is the Medicare-approved allowable amount less the deductible. The remaining balance is $1,484. The Medicare Supplemental Plan will pay the Part A deductible, therefore you pay nothing. The carve-out plan also coordinates with Medicare, but in a different way. If your provider accepts the amount Medicare allows as payment in full, the carve-out plan will pay the lesser of the amount Medicare allows, minus what Medicare reported paying, or the amount the state health plan would pay in the absence of Medicare, minus what Medicare reported paying. Most subscribers will end up paying more under the carve-out plan than under the Medicare supplement plan. To learn more about the carve-out method and how the carve-out plan coordinates with Medicare, refer to the Insurance Coverage for the Medicare Eligible Member Handbook. If you are enrolled in the TRICARE Supplement Plan, you can cancel or switch health coverage when you become Medicare eligible. TRICARE becomes TRICARE for Life, a Medicare supplement. If you choose not to enroll in TRICARE for Life, you may switch to PIBA's Medicare Supplemental Plan or the carve-out plan as a secondary plan to Medicare. Health premiums are determined by the coverage level you elect. Premiums may vary for optional employers, so if you retire from an optional employer, contact your benefits administrator for premium and payment information. A tobacco use premium of either $40 or $60 applies to retirees if they or any of their dependents use tobacco or e-cigarettes and are enrolled in the state health plan. Now let's discuss prescription coverage with the Medicare Supplemental Plan. Medicare Part D is the prescription drug program for Medicare recipients. PIBA's Medicare Supplemental Plan includes a Medicare Part D program administered through Express Scripts Medicare. Medicare offers many other individual Part D prescription plans. However, you may have only one Part D program. If you enroll in a separate drug program through Medicare, you will pay an additional premium to that carrier. You will lose PIBA's prescription plan, and your health insurance premiums with PIBA will not be reduced. Additional information can be found in the Insurance Benefits Guide, or you may contact Express Scripts. Both the Medicare Supplemental Plan and Carve-Out Plan offer prescription drug benefits. There are co-payments for prescriptions. You will pay up to $3,000 per person per year in prescription co-payments. Next up is dental coverage. The Dental Plus and Basic Dental plans are administered by Blue Cross Blue Shield of South Carolina. Dental Plus and Basic Dental coverage are the same in retirement as active subscriber coverage. You will need to enroll within 31 days of retirement or special eligibility situations. Please note, dental open enrollment is held only in odd number years, and changes in coverage can be made only during open enrollment or within 31 days of a special eligibility situation. Dental premiums are determined by the coverage level you elect. You have 4 level options: you and your spouse, you and your children, or full family. If you work for an optional employer, your premiums may vary. Let's look at vision coverage. State vision plan coverage is the same in retirement as active subscriber coverage and includes comprehensive eye exams, frames, lenses and lens options, and contact lens services and materials. You will need to enroll within 31 days of retirement or special eligibility situations. Please note, changes in coverage can be made only during open enrollment or within 31 days of a special eligibility situation. Just like with dental coverage, vision premiums are determined by the coverage level you elect. If you work for an optional employer, your premiums may vary. Next, let's review life insurance. If you are enrolled in a health plan offered through PIVA when you retired, you can convert your basic life insurance coverage to an individual whole life policy within 31 days of retirement. MetLife will mail a conversion packet to you. MetLife quotes premiums and you will pay premiums directly to MetLife. You can also convert your optional life insurance coverage into a whole life policy within 31 days of your retirement. Or you may opt to continue your existing coverage in increments of $10,000 within 31 days of retirement. Continued coverage in retirement ends the January 1st following your 75th birthday. If you choose to continue your optional life coverage, you will pay the same premium as active employees based on your age and amount of coverage. Converted policy premiums are underwritten individually by MetLife. You will receive the continuation and/or conversion forms directly from MetLife. Dependent life insurance coverage also ends at retirement. You may choose to convert existing coverage to an individual whole life policy and may do so within 31 days of your retirement. MetLife will mail a conversion packet to you. MetLife provides quotes and bills premiums, and you will pay premiums directly to MetLife. Now let's briefly discuss long-term disability in retirement. Both basic and supplemental long-term disability insurance are available only to active employees, and coverage ends at retirement. Basic long-term disability cannot be converted at retirement, but you can convert your supplemental long-term disability to an individual policy if you wish. Contact the Standard at 1-800-378-4668 for more information. Let's discuss the MoneyPlus program. MoneyPlus is not available in retirement. If you enroll in the savings plan in retirement because you are not eligible for Medicare, you may continue health saving account contributions, but you cannot contribute pre-tax through MoneyPlus. There are a few important things to know about insurance if you choose to return to work after retiring. If you return to work with a participating PIVA employer and are hired into an insurance-eligible position, you will no longer be eligible to continue retiree insurance coverage. As an actively working retiree, you may return to active coverage or refuse all PIVA insurance coverage. When you terminate your employment, you may return to retiree coverage. There is one exception to this rule. If you are not eligible for Medicare and retire from an employer that does not participate in the state's retiree health insurance trust fund, you can remain on retiree coverage if you return to work in an insurance-eligible position. If you return to active employment and are not in an insurance-eligible position, you may remain on retiree coverage. As an actively working retiree, if you elect coverage under the state health plan and you are Medicare eligible, the state health plan will be primary and pay toward your claims before Medicare. Medicare eligible return to work retirees may want to drop Medicare Part B coverage while actively employed. The retiree should, however, retain Medicare Part A for hospital benefits. If you refuse all health coverage and are Medicare eligible, Medicare will be primary. PIVA's Medicare supplemental plan is not available to actively working subscribers, so you may want to pursue a supplemental plan on your own. Finally, let's look at the resources available to you. The Insurance Benefits Guide, available on PIVA's website, provides a detailed overview of insurance benefits and contact information. PIBA's Navigating Your Benefits series includes flyers and videos that provide plain language explanations of benefits. My Benefits is the fastest, most convenient way for subscribers covered by PIBA-administered insurance programs to manage their benefits. If you haven't signed up already, we encourage you to do so. Your benefits office in retirement depends on the entity from which you retire. PIBA serves as the benefits administrator for the retirees of state agencies, public higher education institutions, and public school districts. Premiums may be deducted from your retirement annuity. Retirees of optional employers, which are those employers eligible to participate by law, but not required to do so, will continue to pay premiums to the former employer, who will continue assisting retirees. To contact PIBA, please visit our website at piba.sc.gov or contact us via email or phone. You can also view more information about PIBA on our social media pages. PIBA, serving those who serve South Carolina.